Welcome back to my channel. In this video, I wanted to cover Robinhood. They announced their earnings yesterday. The earnings overall were very good. I'll go through them and point out what I thought was really good and also point out anything that looks concerning and go through and see what this company is worth. I'll value the company and value them based on the free cash flows I expect they're going to produce as well as the profits they're going to produce in the future. Overall, this is a high growth company with an exciting future. They continue to create new products and reach a broader population of investors. Great job on growing the business. So the revenues for the company went up 45%. That's very good. They've gotten themselves to roughly $1 billion per quarter at this point, and they keep growing. So they're becoming a pretty good size financial services company. Net deposits went up, and they have a gold subscription membership where people can be a subscriber like Netflix and other subscriptions and get added benefits as part of being a member. The earnings per share doubled. So that's pretty good growth, I would say. The other things that I noticed, their transaction-based revenue, which is very profitable, is increased 65%. And net interest revenue increased 25%. That's not as profitable as the transaction-based revenues. The cash from operations was really high, and I'm going to forecast cash to be lower than they're actually producing just to play it safe with their valuation. The cash and cash equivalents were about the same, and they have been buying shares. What's interesting is they were able to buy shares at $41.52 per share on average, and the stock's trading at over $100. So they did a nice job buying back shares at the right times. Overall, the business is doing really well. It's a very good platform for active traders. Well, that's not differentiating the company, but what really makes the company different is the new generation of investors. I think new investors and even established investors, some of them prefer the Robinhood process versus the old school process. They really serve that community, and it's working. I mean, the market is thriving. Retail investing is thriving. So Robinhood is in the right marketplace, producing the right platform that customers want. And of course, they're all over crypto in a variety of ways. If you want to buy cryptocurrencies, you can do it on Robinhood, but they're also getting into the stablecoin market as well as the tokenization of assets and then having those assets sold on Robinhood. Just really good ideas coming out of Robinhood. The last business I haven't heard a whole lot of is kind of an odds making option where you can bet on a lot of events that are going to happen and place your bet based on what you think is going to happen. And if you're willing to put money behind it, then they'll take your money and you can bet against somebody else who feels the opposite. So that's going to be an interesting business for the future. Going down to the financial statements, balance sheet looks great. They have no debt, just cash. Nicely done. Income statement looks awesome. Their growth in net income is showing that their products are really popular with their customers and they make a lot of money on their products. So their profitability, their high profitability rate is very attractive to me. When we talk about cash flows, that's where it's too good to for me to believe. It's $4.1 billion of free cash flow. And when I started the year, I thought if they could get to 1.5 billion, that'd be great. They've gotten to 4.1 billion, which is awesome. And a big part of it happened in the quarter. They generated $3.5 billion in the quarter. Now, looking back over the 3 months that this covers, this totally makes sense. We had the big sell-off in March, April. Then you had retail investors buy like there was no tomorrow. And that type of volume increase created a lot of cash for Robinhood. So they saw a huge, spend by retail investors on stocks, which was a really good move. Retail investors are doing great. And they pay very little in CapEx. When you look at purchases of property, software, and equipment, $10 billion. So I like businesses that produce a lot of cash and don't need a lot of capital to be interjected into operations to either recondition them or uh, keep them running and so forth. Robinhood doesn't have such needs. It just produces cash and it lands on the balance sheet. They can buy back shares, they can acquire other businesses, they can continue to just get more valuable and valuable over time. Robinhood has become a $92 billion market cap company. That's really impressive considering not too long ago they're about 10 billion and they really have gone up in value. They're getting close to being selected into the S&P. When that happens, there'll be a bump in the stock price. Their revenue is 2.34 billion, but as mentioned, their run rate is $1 billion a quarter now, so they're going to quickly get to 4 billion, maybe even 6 billion really quickly. But if you use these metrics, you're paying about 40, 45 times revenue. That's pretty expensive. PE ratio is 89. That is expensive. And analysts think it is priced too high. When I look at the performance of the stock, it's been great. And really, for the 1 year, it's 400%. But if you expand that out to about 2 years, it ends up being far more, like 1,000% return. The financials we went through, looking at what analysts have to say about the stock, there is division among analysts. Some analysts believe, boy, this is a really good business. It's worth a lot. Some analysts are like, this business is way overpriced. And in general, or on average, they would say that it's overpriced by about 11%. 23 analysts cover the stock. Looking at the growth rate. Now, the growth rate in 2025, that's understated based on the consensus forecast. They're showing up, growing 45% on a quarter. So I think they're going to overachieve this number for sure and probably keep the growth going into 2026. So I think that the growth in revenue is going to be better than that. The earnings per share is expanding much faster and they're becoming more and more profitable. So that'll help get that PE down. So overall, I really expect Robinhood's going to grow nicely, expand profit, expand cash flows. Robinhood is a very desirable business. It really fits into the top quadrant of my quadrant system. And the reason for that is that their moat is really strong and they grow, create more profits and cash flows with that growth. Let me talk about moat first. When it comes to competition, they really have been kind of a rule breaking company. They don't follow the traditional rules because there's a lot of companies that try to do that, just do it better. They're not caught up in that rat race. They're really coming out with an innovative user interface, innovative products, things that really there's no competition. They're going into very fertile markets that didn't exist 5 years ago, but now exist. The network power, I wouldn't say that their biggest financial services name in the market, but where they do have customers, they really love Robinhood. Balance sheet is excellent. All cash, no debt. Revenue is growing, just expanding very fast. Profitability is there. They doubled their profitability in the latest quarter. And then free cash flow is just exploding. So those things make me think that Robinhood is a highly desirable business. And I'm willing to pay a fair price for a company that's that desirable. And we'll see what the discount is available on Robinhood in a few minutes. The numbers that Robinhood reported in their earnings were really good, especially around cash flow. And that really increased the value of Robinhood based on the intrinsic value of free cash flows. In fact, I'm not even using the full amount. As mentioned earlier, in the quarter that was just reported, they expanded cash from operations by 3.5 billion just in that quarter. If you annualize that, geez, that's a lot of cash flow. So what I did is I took the first 6 months of cash flow that I'm seeing in Robinhood. I'm only going to increase it by 25% as a run rate. And that'll be the starting point for the next 12 months. That's a conservative way of giving them credit for producing that much cash flow, but not getting carried away. And going forward, they're going to grow those cash flows by 25%. That's very doable. As businesses get larger and establish scale, they become more profitable and their ability to produce cash flow increases a lot. So when I use that cash forecast, the value of the business just goes really high. And I see a 71% discount if Robinhood could achieve that type of cash forecast. When we look at earnings per share, It is an expensive stock. It's actually priced 33% too high. But I really depend on free cash flows. That's kind of the most trusted valuation method that has been used for the last 100 years. When I blend the two and I put more weight in free cash flows, I actually get a 60% discount on Robinhood. That's a pretty good discount. Having said that, I'm going to start buying Robinhood stock again. I hadn't bought stock in a while because it had gone up so much. It's the number one performing stock in my portfolio based on a percentage. But now with the new numbers that came out, they're really good. So it really changes my valuation. And I'm going to buy additional shares of Robinhood. There's a pullback on the stock today, so I'm going to start today by buying some shares. Thank you for watching the video on Robinhood. I hope you found my analysis, my research interesting. I wanted to tell you about the paid member program that gives you additional benefits and access and information from the channel. You can get more details by visiting the home screen and looking for the join button toward the bottom of the screen. There's 3 levels, and you get additional perks like access to my research, access to member calls, being able to put tickers into the live stream and I'll analyze them. And you'll get access to the Discord that we're active in just about every day of the year. So take a look and see if it's the right thing for you. I think you'll learn a lot and get a lot of value from being a member. Thanks again for watching. Good luck with your investments.